Copper or gold? Which metal is the better early warning for market crashes? Hi, I'm Ace, and I've built a 400k plus portfolio in just 5 years by tracking signals that most people ignore. And today, we're putting copper and gold head to head. We'll compare them on signal logic, lead time, false alarms, cycle fit, and how to actually use them. First, the logic. Now, with copper, it's called Dr. Copper because it's in literally everything that we use: cars, constructions, and electronics. When copper's demand is high, the economy is strong. When copper weakens, it's often the first sign that business activity is slowing. Now, gold is different. Gold doesn't just measure economic health, it measures economic fear as well. It spikes when investors lose trust in the system or when real interest rates actually fall. Now, second thing, lead time. Copper usually gives you an early warning. A clear 15 to 20% downtrend over several months has often lined up with recessions or stock market slowdowns. In an economic expansion, copper usually pushes into record high prices late in the cycle, and that's where the warning zone is. It tells us if the economy is overheating, demand is maxed out, and inflation risks are building. Looking back, in 2008, copper hit an all-time high right before the GFC. In 2011, copper spiked again before Europe's debt crisis, and in 2022, it broke an all-time high again right before inflation rate hikes and the 2022 bear market. Gold, on the other hand, tends to move during or after the crash, and uncertainty shows up. So if you do want an early signal, copper obviously wins. But here's a problem. Both throw a lot of fakes and misses. Copper fell hard between 2011 and 2016, but the economy kept going up. Similarly, gold has gone up on geopolitics plenty of times, even in a bull market like right now, where there are high inflations, trade tariffs, and geopolitical tensions. And that's why you don't use these two signals alone. You line them up with other signals like the yield curve inversion, shallow PE ratio, or alarming debt levels. Now let's put this into the 18.6-year cycle. Late in the cycle, like we are right now, commodities tend to go up as well, especially in this one where we are coinciding with the 100-year commodity K-wave cycle bull run and last leg. Well, there you have it. I do break down these signals a lot more in details and how to actually use them to position your portfolio in my free newsletter, so do check them out in my bio. Now I want to hear from you. Which do you trust today? Copper or gold? Drop your answer in the comment section.